What's up, you dirty little day traders? If you've been hanging around for any amount of time, it's no secret over the last few years we've been killing it. Consistent individual winners, sectors, and damn near perfect timing. And while you could easily attribute our successful calls to all the hard work we put in on a regular basis, a well-developed trading system that focuses on 3 pillars of success: risk-reward management, position sizing, and probability, I'm more of a realist. It's just luck. And we get lucky a lot. But the truth is, the market's always leaving clues, like Easter eggs. Sometimes things are obvious at the time, and sometimes they're obvious in hindsight. But we've got a knack for finding them. And speaking of obvious, we need to talk about energy, because it's dripping with clues of what's to come. But before we do, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here we got XLE on the daily. And as you can see, we bottomed back here on that Rona dump back in the end of 2020. And since then, we recaptured the 200 exponential and simple, started ripping to the upside, came back tested them, and went on another run, back tested it one more time, and then we finally peaked out slightly higher. We had 3 big drives to the upside, each with a nice correction, and now it's starting to look like we're rolling over. We've lost the 200 exponential, and it's flipped red. We've lost the 200 simple, and it's basically flat. And this is the most dangerous energy has looked in the last few years. And while it was very, very obvious momentum was starting to pick up and this thing was going to go for a rip, it's up over 100% in the last couple of years. And now it's given off some signs that the run is probably over. And I'm not saying energy has to just capitulate back down to those super low levels that we'll probably never see again. But the fact of the matter is, if there's ever danger in the markets, it's usually right after these warning signs start flashing. So let's slap a couple drawing tools on here and see what's going on. So right off the bat, we're going to roll back out here. And we want to take a look at the 2014 top. We're going to extend our fib all the way down to that like $23 level. So we're basically 100 down to 23. And then we're just going to pull it over to the right a little bit. And as always, we'll just turn that one orange. And then we're going to slap one more fib on here down at those lows again. And then we're going to take it up to our recent highs right here. And we want to pay attention to those levels as well. So realistically, what do we see happen? We had an all-time high back in 2014, and you guys know normally I'm not a big fan of things that aren't putting in new cycle highs, but we know that energy operates a little bit differently, so we'd give it a little bit of a pass, you know, since humankind needs it and everything. And if you're worried about the F word, fundamentals, we're about 20 years into this green energy movement, and worldwide, the human race just consumed a record number of coal and hydrocarbons. So I'm not saying one day we're not going to be all flying around on unicorn farts and magic bean juice. But in the meantime, we'll just stick with what we know. So we almost came up here and put in that new all-time high, but we fell a little bit short. We still haven't come back down to retest the 236. Although if we were going from this peak right here, we technically did. So that's worth paying attention to. But I want to focus in on this actual run right here and what's taking place. You guys know I like to watch parabolas and essentially look for how the actual market is responding. So we're going to go ahead and grab our drawing tool, and we're going to take this low from November 2020, and that was our first higher low. So we had that dead cat bounce back up, we came back down, and then we put in a higher low. That's very important because it gives the market confidence and starts to build momentum. Once we took hold of the 200s and they flipped back to the upside, it was very clear we were going back into at least a short to medium term bull market. And that's exactly what we did. So we focus on the next higher low, and then we're going to go ahead and just connect those together. And we'll see that we can basically have a pretty good support through this range. We can kind of nitpick it a little bit, but once we lost that support level with that initial pullback, we then saw it act as resistance. And we kept creeping up here, and we actually put in a slightly higher high. But you guys know, again, if you've been following for any amount of time, it's very common for us to peak out, come back down, retest levels, go slightly higher, and then see a retracement afterwards. And that's what we're paying attention to right now. So we're going to take one more drawing tool, and I want to draw in some resistance as well. So here was our initial peak basically, and then we saw another peak through here, 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 and it was definitely running into that resistance consistently. And if we just extend that out to the right, we'll see that once we broke through that resistance, it actually came back down and acted support. The same way with once we lost this support, it then acted as resistance. And obviously that's an integral part of our trading strategy. But in this case, we can see very clearly what's taking place. We had a very aggressive move to the upside initially. It's starting to calm down a little bit. And if we come down here much lower, we're going to start threatening those previous lows. We're going to basically be on a horizontal support. And if that continues long enough, this is the typical cycle that you see, eventually a bounce, and then theoretically another move back to the upside. So right now we've got some pretty clear resistance here. We've got some pretty clear support right here. and we've got some key Fibonacci levels to watch on our drawing tools. So the initial target I'm going to be paying attention to for a retest to the downside is going to be realistically the 786 and then the 236. Now we already came down to the 786 enough times that I'm essentially considering that to be tested. So really what I'm looking for is that $67 level. And that's going to be our initial 236. So we don't know if we're going to break down from here right away or if we're going to get another push back up, kind of consolidate. But eventually, let's assume that we do break down to the downside. We're going to look for that level at the 236. And when we get down to that level, that's going to at least temporarily act as support. And then we would expect a push back to the upside to retest that what was support as resistance before theoretically going lower. And that's going to give us our target down here, which is the orange 618 or the green 382. So I'm just going to extend this one out just a little bit more. So yeah, that's what I'm looking at. An initial push down to the 236 at about $68, a back test up here to about $82, and then again a push lower somewhere around like that $56 to $57 range, in between the 382 in green and the 618 in orange. And realistically, we could go lower, or maybe we never even break down from this level and we just go higher. But based on what we're seeing from the parabola and then also the moving averages, it seems pretty probable that that's going to play out. So if we just zoom in here real quick, we'll see that we had essentially the bear market started right here. We pushed back up one more time and we put in another lower high. So we have a series of lower highs. We have a series of lower lows, and now we're below those moving averages. So all we need to do at this point in time is go sideways, and eventually 200 simple, actually in the next few days, probably going to flip over to red. And at that point in time, we'll confirm back into a bear market for the second time. And while we attempted once to save that bear market, this one might be the nail in the coffin. Now we know it's all about probabilities and not certainties. So anything could happen. We could push back up to the upside. But realistically, we need to pay attention to what are the likely targets to the downside. What is the market actually telling us right now? So if we just go ahead and turn on our drawing tools one more time, I'm going to get rid of this real quick. And I just want to pay attention to this little area right here where we've got all those lower highs and lower lows. So it's not always going to look perfect, but I'd say that's a pretty good channel right there. We're obviously respecting the bottom of the channel, the top of the channel. We've got multiple touches on each. We have a key support line that we're holding in the meantime. And we have the 200 slightly above our head at the top of that resistance. So it does seem likely that we're going to get at least a short-term bounce back up to the 200s, around $84 or so. But to tell you the truth, I expect that and the top of the channel to act as resistance, us to squeeze into this little bit of a triangle, and then to get the push back down to the downside. At some point in time, I would expect us to come back up, retest what was support as resistance before going lower and hitting some of those targets we talked about. So yeah, energy over the last couple of years, been a real nice trade. And regardless of if you saw the technicals and decided that's why you wanted to be involved, or maybe you just didn't quite buy into the fundamentals, either way, it's time to pay attention. So we're seeing some clear clues from the market that this is probably at least a consolidation period, if not a top, and we're going to see a deeper retrace. And just because we're losing the 200s and getting ready to flip into a bear market doesn't mean we're going to have a deep correction or some kind of crash in energy. But we know that historically speaking, before those crashes take place, we always see the 200 exponential and simple flip red. So even if we have a shallow correction, once we get back into a little bit more of a bullish momentum trade, we can always re-enter. But if you're going to be successful on a long term, making money, trading, investing, or speculating, before you can make money, you got to learn how not to lose it. And the easiest way to not lose money is stay away from anything that's in a bear market. So with energy flashing those big red signs and the potential of entering into a bear market, we can draw a lot of conclusions about the macro. We can talk about fundamentals and all that good stuff. But the truth is, the technicals are staring us right in the face. So yeah, just want to take a look at XLE, focus in on energy for a bit. We had a nice run, but it's looking like it's setting up for some serious turbulence. So yeah, please remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. If you enjoyed today's video, make sure to like and subscribe. Really helps out the channel. Crypto Trend Trader, and I'll catch you on the flip side.